Hey everybody, I hope everyone is doing well and had a good day. In this video, we're going to review the E-mini S&P 500 5-minute chart for Friday, May 22nd, 2026. Here's the daily chart. Strong bull trend. We had a pullback, double bottom, bull flag, and then consecutive bull bars going into the day. Bull bars closing near their highs. In general, in a bull trend, if you have a bull trend bar, it's really not ideal to sell above that bar. So as far as support and resistance with yesterday's high and low, there's probably buyers below yesterday's low. But as far as sellers above yesterday's high, maybe not directly above. I have the close of May 14th drawn here because that is a more major area of resistance. We may hesitate, find some sellers above yesterday's high, but if we think about breakouts and trapped traders here, it's a buy the close rally up to May 14th. And then there was a gap down with follow through. That's a bear breakout, which traps the traders who bought up here. They're disappointed. And when the market comes back and tests their original entry price, the expectation is that they will sell. And that's why there's probably resistance in this area, the high close of this rally before the pullback. As far as trend resumption here, pretty good bull bar on the 20th, but yesterday had a lot of overlap with the prior bar. So the expectation for today is probably not a bear trend day. If anything, it's either going to be a more bullish day or a more sideways day. But to me, it looks like a bear trend. It does not look like the context supports a bear trend for today. Gap up going into the day and then follow through buying on bar one. That's good for the bulls. This is a bull breakout far above yesterday's high. And the odds are the breakout, the gap up, and follow through will get a second leg because of the trapped traders. Yesterday's high is a breakout point. There's probably support here. And if we get back down to these breakout points, maybe yesterday's close, the moving average, the odds are there will be buyers there as well, unless the bears get very strong momentum on a reversal down. Bar 2 is a smaller follow-through bar, relatively small bar compared to bar 1. Still, it's a follow-through bar for the bulls. Probably will be buyers below bar 2. It's not a good sell signal. 3, a trading range bar. Now we have an outside bar. The market's starting to go sideways. Probably buyers below 3, sellers above 3. Inside bar on 4. So continuing to go sideways, probably sellers above 4 and buyers below 5. It's probably a minor reversal. There's not enough selling pressure for a major reversal here. But the problem if you're buying is that at this point in the day, bar 1 is the low of the day. And if you look at most days, that's a statistic that is going against the bulls right now because the bar 1 usually does not remain the high or the low of the day. So I said minor reversal likely if we do find sellers below 4, but that means the market could fall below 1 and find buyers below bar 1 and still be in a bull trend. Now we have a micro channel from bar 3 down to bar 5. There's probably sellers above 5. The amount of sideways price action we're getting here is disappointing for the bulls. Price is far above the moving average, so the traders who are buying at a premium price far above the average, but they're getting sideways price action. So their premise that they're buying momentum is really not valid. There might be sellers above 5 here. 6, triggering the high 1 buy, but again, more bars added to this tight trading range, sideways for about 5 bars. The stop order entry above 6 forces you to enter in the middle of this tight trading range. I still think a second leg up is likely, but it's really a micro channel all the way back from down here, bar 77 to the gap up to bar 2. So the pullback can be deeper. 7, bear breakout bar. We still have not fallen below bar 1, and 7's a strong enough bar. You know, it trapped traders above, traders who bought above 5, bought the close 6. They're trapped on bar 7, so probably will go at least a little bit lower. There are likely buyers below bar 1 and buyers at yesterday's high, but again, 7, strong enough momentum that it may get a second leg down before the bulls get their second leg. Market bouncing on bar 8, finding sellers above. It's a double bottom, but strong enough momentum down that the first reversal would probably fail. And the bears get another leg down. You can count 3 legs. 1, pullback. 2, pullback. 3 legs down. Market's attempting to break below yesterday's high and the moving average. Both are support. The breakout bar 11 is weak. It's closing around its midpoint with a big lower tail. Let's see if the bears can get follow through. And instead, it's a bull bar closing on its high. Bull breakout bar 12, reasonable bar to exit shorts above if you're short. Also a reasonable bar to buy for a swing trade. It's a lower low, double bottom. It's 3 legs down to support. Market failed to break below support, and now it's getting a bull breakout on 12. The bulls might have a brief opportunity here to buy with relatively small risk. And if it's a swing trade and the micro channel, or you can call it the gap up and follow through, if this is going to get a second leg, then we may test the highs. Although, because of this sell-off on the open, there's probably disappointed traders up here on these highs, and that creates resistance. I know I talk about this in every video, but it's basically the foundation of breakouts and trapped traders, what I'm talking about. Gap up, follow through, more follow through. Traders buying the close too, they're doing something reasonable. It's a momentum buy. They're buying during a bull breakout. But eventually, some traders, they're disappointed with 3. Maybe they exit on 4. Market gives you an opportunity briefly to exit at break even. But again, through here, if you're buying, you're disappointed with the market going sideways. If you're buying based on the momentum premise and the market goes sideways for 4 or 5 bars, then you must be disappointed because it's not giving you momentum. You're going sideways. The traders who were not quick to exit, if they bought the close bar 2, they're trapped on this bear breakout and further selling. And now the traders who bought up here, maybe they're scaling in lower, but they're not forgetting about their original entry. They're thinking, wow, if the market gets back here, they're going to be happy to exit at break even. It's also going to depend on momentum. We'll see when we get there, if we get there. And for now, it's 3 legs down, an attempt to break out below a couple of support areas. Yesterday's high, the moving average, and now it's a bull breakout 12 with follow through 13. 3-bar micro channel, strong enough buying that the first reversal down will probably fail. 3 legs down, you expect at least a couple of legs of a correction sideways to up, but also I mentioned that this is potentially a swing trade for the bulls. This might be, the bulls are hoping we're putting in an early low of the day. Now we have a 3-bar micro channel. There's probably buyers below 13. Another bar added, so probably buyers below 14, as the micro channel is likely to get a second leg because of the trapped traders. The same but opposite is true here. Now the bears who sold bar 11, they're trapped on 12, 13, 14. They're hoping for any pullback to minimize their loss. And then more bars get added to the micro channel, further increasing the probability that the bulls get a second leg. We're testing resistance, breakout point. The bar 7 breakout broke below the bar 5 neckline. You could have called it a double top, but either way, 7 breaking below here. The significance of that, any trader buying below 5, trapped on 7, they may look to exit as the market tests their break-even price, so that may cause some hesitation. And you can see a little bit of hesitation there, but does this look like, from 11 to 18, are you thinking, I've got to get short, or does it look like a pretty tight bull channel? There's really only been one pullback lasting 1 bar, maybe 2 bars if you count the inside bar, but it's a really shallow pullback. You know a second leg up from 11 to 15 is likely. So 18 is double top with 15 at that resistance, but it's a bad sell, bad stop order sell. There's probably buyers below 18. Buy at the close 18, reasonable. And then this micro channel continuing. There's more resistance here. There's layers of resistance. So the stop order that triggered above bar 5 on 6 is also expected to be resistance. The traders who bought there got trapped. But a couple of micro channels up here, the bulls will probably get at least one more leg. So there might be more traders buying below 21, another bad stop order sell. 22 reaching that first level of resistance. We may hesitate here, but the approach to that resistance is so strong that I think any reversal attempt here will only be minor and be a pullback before this breakout gets another leg up. So we see a small hesitation there, then 24 testing the next layer. Again, this goes back to the trap traders I talked about earlier. If you bought the close 2, you're disappointed by the sell-off. Now there's this rally, and it's a pretty strong rally, but can the bulls break out strongly above here, or are they disappointed by the sell-off, and will they use 24 to exit at their original entry and contribute to selling? Well, 24 hardly broke out above the high or the close of 2, and now we're getting a bear reversal bar 25. You can count at least 3 pushes. If you're counting spike breaks for leg count, it's only 2 legs up, 1, pullback, 2. But through here, it's 1, pause, 2, pause, 3. So structurally, this may pull back before continuing. You have a bear bar closing on its low at the top of a trading range. It's probably okay to exit longs below 25, but it's a low probability sell, relatively small bar, so small risk against a very tight bull channel. And the market hesitates. It doesn't go straight down. There's so much momentum to the upside. The traders selling, they're getting great risk reward, but low probability. Again, the market's going sideways above the moving average at resistance in a trading range. Big up, big down, big up. There's probably sellers up here. We're seeing at least some hesitation here. So 27, setting up a high 1 buy, but this would be leg 3 in a trading range. And there were sellers above. 25 reversal bar, pauses, gets a second leg down. This all looks like a leg in a trading range, not a bear trend. The bears are not getting consecutive bear bars, and the bars are all overlapping one another very heavily. The bears fail again to get a consecutive pair of bear bars, with 28 being followed by another bull bar, but it's an inside bar, probably sellers above 29. And then consecutive inside bars. It's a tight trading range, limit order market, sellers above bars, buyers below bars. Big picture, or bigger picture, this is a tight bull channel. I'm expecting a second leg up. I'm expecting 25 through 30 to be a bull flag. It looks like a minor reversal. And then from the perspective of the trader's equation, you can sell up here hoping that it's a wide trading range and the market comes back down and tests maybe yesterday's high or any of these prices down here. But if you're selling here, you know you're taking the lower probability side of the trade with good risk reward. The bulls have higher probability with the momentum on their side, but in theory, their stop is all the way down here or at least below 16. So they have bad risk reward, but the higher probability is on their side. Continuing to go more sideways to down, the bears have now 3 legs down. We're channeling sideways to down. It looks like a bull flag. Bear channel, bull flag, you expect the bull breakout. Bear breakout attempts below the channel line usually fail. $34, that's a bear breakout attempt below this bear channel line and the moving average. We'll see if 34 gets follow through, but it's unlikely to go very far. The bears are hoping that it's an endless pullback, strong, tight bull channel, and the market just drifts sideways to down, and then eventually the bulls give up, and the bears are hoping we get that give up and the sell climax back down to the lows. But more likely, after 3, maybe 4 legs down or 4 pushes down to a channel line and support, this is going to probably hesitate and go more sideways than down. And the bears fail to get follow through, and that's what's happening here. More sideways bars. It's still a tight trading range, 36, setting up an okay buy, but the bear channel is fairly tight. And that's a breakout on a higher time frame, which means any trend resumption attempt by the bulls may be a pullback. In other words, bear breakout from the pivot, 25 high, down to 35. That's a bear breakout. 36 might be a pullback before a second leg down. 36 is a strong enough bar that I don't think bears are eager to sell above it. And structurally, it could be a wedge bull flag at support. So I think it's okay to buy. But if you do buy, you have to be aware that you're buying on the bear trend line, which is resistance, and against a tight bear channel. So this might be a minor reversal. And all of this looks like it's within a trading range, which means all of it's minor. And all of these overlapping bars through here, every trend bar is getting bad follow through. Bar 24, great looking bull trend bar, but bad follow through. 25. 28, good looking bear breakout, but no follow through. 29. 34, great looking bear breakout, but late leg and bad follow through. So will 36 get good follow through? Probably not. 37, so testing resistance to the left. But now 37, again, another good looking bear bar, but it's at support, and now it's maybe leg 4. 1, pullback, 2, pullback, 3, pullback, 4 legs down to support. Even though 37 looks like a strong bear reversal bar, the context is bad. Again, it's a late leg at support. So there might be more traders buying below, and we see that traders were really not eager to sell below it. Instead, the market went sideways. We've reached support, the moving average, and now we're going more sideways in a very tight trading range. There's probably buyers below 38, sellers above 37. And the tight trading range continuing, a lot of overlapping bars here. 36 triggered the buy, pulled back. It got a second leg here. Looks like it's subdividing into 2 legs of its own as well. 38, 39, 40, rally, implied pullback, and then another rally here. Still probably sellers above 37. And again, this high close of bar 2 looks like it's acting as resistance. The more bars added to the tight trading range. 43, a strong looking bull breakout bar, but it's a tight trading range through here, and it's testing resistance. It's 2 legs up, 1, pullback, 2, but 3 pushes, 1, 2, maybe 3 and 4 pushes up to resistance. So what's the probability that 43 gets a strong follow through bar? It's probably not likely. If anything, there's trapped traders up here, and in a trading range, traders buy low and sell high, and the market's testing higher in the range, which leads to a weak follow through bar. Really no follow through bar. 44, probably sellers above 44. Selling below 44, it's a low probability trade, but you get good risk reward, and you're selling at resistance in the trading range. And 45 is a better sell. Bar close, bear breakout bar closing on its low. It's a reasonable sell. And then 46, a big bear breakout bar, but once again testing support. Also, I mentioned back here that this tight bear channel from 25 down to 35, it's a breakout on a higher time frame chart. And it's possible that 46 is a second leg trap where the first leg is here, leg 1, 2-legged pullback, And then leg 2, it's actually a leg 2 measured move. So it's testing a couple of areas of support here on bar 46. 46, again, testing support. It's a bigger bar, so it's forcing you to sell low with big risk. And in a trading range, traders are going to do the opposite. They're going to buy low and sell high. So the market's testing low support. And just if you're thinking logically about the signal here, pretty much all of 46 is overlapping the bars to the left. Only a fraction is actually breaking out. So it still needs a follow-through bar. But it's forcing you, if you sell the close 46, I'll put it this way. Would you rather sell the close 46, stop above the bar, and put a target, a measured move down? Or you can do the opposite. Buy the close of the bar, fade the bear breakout, put a stop, a measured move down, and target at the high of the bar. It's worth thinking about and finding examples of this because you see it all the time. In 47, the bear breakout fails. It's Al's 80% rule. 80% of breakout attempts of trading ranges fail. 46 attempting to break out below this trading range, and it fails and reverses up on 47. 48 is a surprising bar. It's a big breakout bar. The 80% rule comes into play once again. It's a huge bull breakout bar. It's closing far above all the bars to the left, and that's good for the bulls, but it's breaking out above a trading range. It's been a trading range day so far today. So there is a magnet above. It's possible we get there, but will there be more buyers here? Or logically, if we think about what this magnet is, it's the May 14th close, which I showed on the daily chart. The odds are there are trapped traders there who are disappointed, and they may be looking to sell. So to me, it looks like this could be a buy climax test of resistance. 48 is a strong enough bar that it may get a second leg up. It's not likely to reverse straight down into a bear trend, but it's not a great buy because it is a third push and it's a breakout above a trading range. Better to wait for at least one more bar of follow through and then a reversal bar 49. So the range is expanding, but it's still a trading range. Now 49, a strong reversal bar, the market failing to break out above that resistance. The traders who bought the close 48, they're trapped on 49. They're hoping for any pullback they can get to minimize or avoid a loss. I said it's unlikely to go straight down, so we're starting to hesitate here, which was more likely. But 50, it's a high one buy, but you just got this strong reversal bar 49, so traders buying 48 are trapped by 49. They're probably happy to sell above bar 50, so there might be more traders selling above 50, not buying. And then we never triggered the buy. The bears are getting a micro channel down here for 4 bars, 5 bars, 6 bars. Strong enough bear breakout that the first reversal up will probably fail, be minor, lead to a pullback, and then a second leg down. So 54 probably sellers above, and that happened on the next bar. Now we're back at support, so we're probably going to bounce here, 3 pushes down. But tight bear channel, really just one pullback here. So it's probably going to bounce and go sideways here like we did back here. But let's see if the bulls can get a reversal and test the highs up here, or if the bear breakout will get a second leg down. It's a tight trading range through here. Limit order market, probably buyers below 55, sellers above 55. Using this bar as the lower range here is reasonable. It's a tight trading range. Again, limit order market, sellers above bars, buyers below bars. So a bull breakout, but approaching resistance, probably sellers above. Bear breakout, as it approaches support, there's probably buyers below. We can see the market responding to that support, bouncing here. 64 bear breakout, but probably buyers below. Another attempt, 65. It's a double bottom, maybe a double bottom bull flag, bull breakout, pullback, second attempt, and then a stop order buy above 65. But 65 is testing this resistance. There's a bear trend line, and every time the market tests it, it reverses back down. And in this case, the stop order buy didn't even trigger. Tight trading range continuing, probably sellers up here and buyers down here. But then we got a bear breakout 67, far below this support and closing below all these bars to the left. That's good for the bears. Why? Because I said through here, it's a limit order market. It's a tight trading range. It's reasonable to buy at this support, the red line. But a trader who bought here got trapped by the bear breakout, and they are now holding a losing position. And they're going to look to exit that losing position with as small a loss as possible. So the bulls who bought are looking to sell, and that contributes to the selling, which produces a second leg down. So I'm expecting 67 to get a second leg down here. It's a micro channel with a fairly weak stop order buy signal, 68, probably sellers above. And this did not trigger it. 69 tested the high of 68, but it did not trigger one tick above. So now we're going sideways with an inside bar here. Still probably sellers above 69, maybe even sell to close 69. Bear breakout, sideways pullback. The bulls, there's an open gap. Whether you bought, even if you bought the lowest price, this breakout point, you're still trapped, and the market never came back to that original entry. You would have had to have been very quick to maybe buy here and then, look to the left. Here's a breakout bar, 68, with the inside bar, 17 high, also support. Market's bouncing there. Maybe a bull buys here, buys more here, and exits at their break-even entry, their average price between the two. Otherwise, the bulls are trapped here and they're losing money because the market's not getting back to their original entry. So this is becoming a tight bear channel. It's actually technically a micro channel, and it looks like it's a micro channel since bar 63. Every high is at or below the high of the prior bar. So probably sellers above bar 70 and 71, or sell to close is also reasonable because the bulls are trapped and there's not much buying pressure. On the smaller time frame, it's channeling, but it's such a tight channel that it's a breakout on a higher time frame, and any buying is probably more caused by bears taking profits than bulls aggressively buying. And then a give up bar 72. It's breaking below a channel line and it's accelerating into support like the high of yesterday, where it'll probably bounce there again as we tried to break below it earlier in the day and got this big rally. We'll see if the bears can break strongly below yesterday's high here. But structurally, we have a bear breakout, sideways, bear breakout, sideways, and then a third push down. And then we're finding some support here. 73 bull reversal bar. It's a low probability buy. You have good risk reward. The bears have all the momentum. So buying 73 is low probability. It's not a great bar. It's not a great signal bar to sell directly above because it is at support and it's closing near its high. But traders may come in and sell above, for example, bar 72 instead. Bulls get minimum follow through on the reversal. There's probably buyers below 74. Looks like we're starting to go more sideways here as we approached that support. So maybe buyers below 72 or 73. It's a micro channel, but structurally fairly weak. 3 pushes down. And buyers on into the close of 76, closing above its midpoint. Now it's a second reversal for the bulls, which is better. It's still not strong enough to reverse. It's unlikely to be strong enough to reverse this entire tight bear channel. But it does look like we're failing to break below support, this blue line, yesterday's high. 78, a bull breakout, but testing resistance, the moving average, the tight trading range back here. It looks like we're in a sideways market once again with sellers above and buyers below, another limit order market. So buyers come in again below 78, and we continue to go sideways in that range into the close of the day. Okay, that's going to be it for today's end of day review. Thanks everybody for watching, and for more Brooks price action fundamentals and how to trade price action, you can visit the Brooks trading course with the link in the description of this video. All right, thanks again everybody for watching, and I hope everybody has a good weekend.